Another example of frustration with the system is given by the DAX today. Some market conditions obviously are better than others, and some are really bad for the system. And the fact that today, for instance, we actually managed to have zero on the DAX was a pretty good achievement, all in all. The point was that, well, first of all, a very low range. The DAX usually has a much wider range than this. And really all the action took place between this, which is the pivot point, this, which is the horizontal line on the big round number, 11,600. But also if you look at what happened yesterday afternoon, really this was the range. This is where really the traders were happy to stay. Yes, you had this basically out of trading the spread with the American markets. The American markets went up, and so this followed, but the volume was quite low actually here. You may argue that it could have been a gap close trade, but well, let's not go there. This is an important area anyway. So there's nothing we can do on the open because we would have entered very, very close to the big round number, and once that is passed, we will be really very close to the pivot point. So this is these are rules, okay? We don't trade close to pivot number and close to big round number. And the point is that it actually helped us staying out of trouble so many times. And this is a price you have to pay. It was a good trade, but you couldn't get it. Then again, you have a signal here, same problem. You have the pivot point here, and then again here, what do you want to do here? If the pivot is at 89, you want to have a buffer of probably 5 points. You would have entered at 84. The lower boundary of this line here is 80. And really, you don't want to risk this one. Even if it's 9 o'clock, you still have another hour. But I mean, you've seen that the market is quite jerky already. If you took this, you would have taken it at about this level here. You would have been in trouble. Obviously, the best place to put a stop is just above the big round number, and which was at this time above the moving averages. So you wouldn't have been stopped out, and you could have got a couple of or three, even more, opportunities to get out of break-even. So again, the importance of placing the stop at the right time and the right place is massive here. So really, as the time goes by, you can see that this area here is still quite important. Again, here that would have been 11 o'clock, so it wouldn't have been valid. But again, you can't take a trade between the pivot point and the big round number. So there was nothing to do here. This was a different one. You have a signal here, but this was 130. And again, combined to this low range, there was quite a lot of news from the United States. And at this stage, Draghi was still speaking. So it wasn't a good idea to get in. You could have got in. It would have been quite risky. You could have got in at about 10. The market went to 26. And again, if you were cautious, you wouldn't have taken this one, and you would have lost an opportunity or missed an opportunity. But we know that we would like to err on the cautious side rather than on the aggressive side. The other thing is that the market really doesn't move very much, and so we were waiting for something to happen, and that happened here, and this is for 2:30. This is New York Open, where we don't trade, and this was a nice breakout, 1450. The only problem was that there was this line here. This is an important line, and I'm going to show you why in a second. This is the daily chart. Okay, this is the top of the range. Apart from this spike, this is the top of the range on the daily. So you know that this would be difficult to break. You will need quite a lot of momentum to break. Where is this compared to our entry? Well, our entry would have been at 26, so let's say 28 or 29, and this is at about 40. So you do have enough space for at least a scalp of 10 points. What happened? You entered at 40, the market went at you entered at 30, the market went to 38, 39, and then it went back. And basically this was a break even. And I know that the temptation would be enormous to re-enter on the break of this. But look at where you would re-enter. You would re-enter just on the upper range of a daily range, upper level of a daily range. This is never a good idea, never a good idea. So you already know that the market is not doing much. You could have seen from the US indices that it wasn't really going anywhere. So this would have been a very, very aggressive and bad trade really. And in fact, you would have been punished by going down here. Again, same thing as before. Then you have some sell signals here, not triggered. You would have been triggered about here, but you know that in this area there's no point to be trading. And this actually happened at 4 o'clock on Oil News. So again, I just wanted to show that it was a frustrating day. You would have had basically nothing to do apart from a break even. But you have to keep your discipline, because this is what really ruins the accounts. Just getting in on frustration. Well, I hope that it was a useful other lesson. Thanks a lot and bye.